the biggest macroeconomic idea is that on average, the US dollar, the world reserve currency, and currencies that are pegged to it or trade close to it at parity have been losing 7% of their economic value every year for 100 years on average. So typically the monetary debasement rate is about 7%.
Wow.
The return or appreciation of a market basket of highly desirable corporate stocks, the S&P index, is about 7% over the same time period. So if you have wealth, if you had $1 million, 100 years from now, if you invested in the S&P index, you'll have an amount of money or amount of wealth worth the same amount, $1 million. It'll look nominally like a lot more. It's going to double every 10 years for 100 years. So it'll look like more, but it'll be worth the same amount because the currency is losing value at the same rate that the portfolio is accelerating.
Yeah.
If you take that same $1 million and you invest it in bonds that are yielding 3.5%, well, then you're going to end up with about $35,000. But you're going to end up with 3% of your wealth. You're going to lose 96 to 97% of your wealth if you're holding a bond portfolio for the 100 years. If you take the $1 million and you hold it in just currency, the dollar, that will be worth $1,000. So you will lose 99.9% of your wealth. It'll be worthless in 100 years. So in terms of investment strategies, if you invest that in highly desirable, perfect real estate property, you might get 1 or 2% better than the S&P index, but you might just get it. And most other strategies that are diversified, mixtures of stocks and bonds, will underperform the 7%. And so you're going to get a blend like 3, 4, 5%. So the best you can do with any conventional strategy or either conventional equity or conventional property is to keep up with the monetary inflation rate, which means you can't build wealth. You might be able to maintain wealth. On the other hand, if you take the $1 million and you invest 10% of it in Bitcoin and the other 90% in the S&P index, you can look at Bitcoin and say, well, what's the natural organic appreciation rate of Bitcoin? In my opinion, it should theoretically be about 14% a year versus the 7% a year for the S&P index. Because Bitcoin, it has all of the attributes of an asset that's a security, but it doesn't have the liabilities of companies. There's none of the dilutive effects that hold back a company apply to Bitcoin. The problems with companies are they have a management team, they have employees, they have products, they have competitors, they have regulation, they get taxed, they might screw up, they have execution risk. We could talk for hours about ways that companies don't work, but if you've studied corporate history and you look at 100 companies and you say, how did they screw up? You'll see one of those. And if you looked at a portfolio of commercial real estate or other real estate and said, well, how do you lose money? Well, it gets taxed, it gets regulated, there's the mayor of the city does something to it, it gets rent controlled, there's a war, it gets bombed, it gets decayed, an earthquake hits it, a lightning strike hits it, it rots, insects attack it, your renters don't pay their bills, someone actually blows up a bomb in front of it, the neighborhood goes bad. Lots of ways you lose money in real estate. So Bitcoin is digital property. It's like a big tech monopoly, but without the company liabilities. And it's digital property. So it's like good property, but you can move it anywhere in the world. It's weightless, it's indestructible. You don't have to pay to maintain it. So that's how you get from 7% to 14%. Now, when you think about that, if you put 10% of your portfolio into Bitcoin and wait 100 years, you've got wealth worth $100 million. You've got 100x as much money as you had. So if you want to build wealth, you start by putting a portion of your portfolio into Bitcoin and holding it a long time. If you put 50% of your portfolio, you end up with $500 million worth of wealth instead of 1 million. And if you just convert your $1 million worth of stocks into $1 million worth of Bitcoin and hold it 100 years, the difference between 7 and 14% compounding is 2 times 10, 2 to the 10th. So what that means is you end up with $1 billion worth of wealth instead of $1 million. So you become a billionaire, a legitimate one. So if you're thinking about this entire thing, the first thing is you have to generate cash flow to invest. So you got to work hard at your job as a doctor, whatever you do, you know, your vocation, you have to go and you have to generate cash flow or raise money to invest. You have to raise equity, raise debt, or generate cash. Those are the 3 ways to get the money. Once you have it, the difference between losing 99.9% of your wealth or generating 1,000x more wealth is, do you invest in cash? Do you invest in bonds? Do you invest in diversified equity? Do you make perfect investment decisions, or do you invest in property, or do you invest in Bitcoin? And the range is 1,000x on one end and 99.9% loss on the other end. And then it's just time. You have to let time work. Because the one thing that you can be sure of is time creates chaos and inefficiency. Everybody knows if you look at that house and you don't do anything for 100 years, you can predict the house is going to decay. Everybody knows if you hold $1 million worth of Argentine pesos and wait 100 years, they're going to be worthless. Do you know the peso used to be worth $1? And today, as we're sitting here right now, the exchange rate is 570 pesos to the dollar.
Whoa.
Okay, do you know what the peso was trading at 5 years ago? 30.
Do
you know what the peso was trading at 1 year ago? 293.
Whoa.
So you have a very simple example where with the peso, if you waited 23 years, you would have lost 99.8% of your wealth. You see, so time is going to wreck the currencies. Time is going to wreck the companies. How many companies that were around 100 years ago are still around? And how many stocks you could have invested 100 years ago would have made you money? So what is timeless? Like a bunch of land? Like, for example, the middle of Tokyo, the Imperial Palace. If you're the emperor, what do you want? You want to own the most desirable land in the middle of Tokyo. How long do you want to own it? Forever. When are you going to sell it? Never. If you're the King of England, what do you want to own? The most desirable land in London. How long do you want to hold it? Forever. When are you going to sell it? Never. Is it more valuable today than 100 years ago? Yes. You see? So what you want to own is the most valuable property in cyberspace. Bitcoin is the most valuable property in cyberspace.